I'm going to bring in out 42 Macro founder, also their CEO, Darius. And I just want to begin first, Darius, with the Federal Reserve, right? Because what's interesting to me is the latest Bank of America survey. You've got, when it comes to the economy, large percentage, it's 52% of these fund managers saying soft landing, 36% saying no landing, only 6% saying hard landing right now. Where are you on this?
Oh, we're very much in the no landing camp. I've been in the no landing camp for quite a while here. I don't know why we still pay attention to this stuff. I mean, just look at a chart of the stock market. That'll tell you what people think.
Really? So just ignore them? Is this why, by the way, they underperform the market?
I don't want to
go that far?
I don't want to go too. You said it, not me, Charles.
I figured since you opened the door to dissing them, you might as well go all the way. All right, the next topic, sticky inflation.
Yep.
All right, we just saw, we got the inflation data out, and by now, everyone understands sticky inflation and the problems that it's caused. This is the Atlanta Fed. So the trend is sort of lower, but this last spike really reminded folks that this is not going away anytime soon, is it?
100%. We've been saying since January 22 that the equilibrium core PC inflation rate in the U.S. economy is somewhere in the high 2s or low 3s. The Fed is trying to get it down to 2%. In our view, they're going to be unsuccessful at getting it down to 2%, and they need to revise their inflation target higher so they can start using their balance sheet again to help capitalize the Treasury market.
They've resisted that, though. They've resisted that kicking and fighting. Yeah.
You know why? Because they let the inflation genie out of the bottle, and now they're playing, mop-up duty.
Right.
As opposed to having a forward-looking first principles framework for monetary policy.
But they don't have to be wedded to a 2% number, though. Why can't they go to 3%?
Been saying that since January 2022. Where does this 2% number come from?
Let's talk about the economy. So today we have Walmart's warning. That kind of set the wheels in motion. Then later on, we got the leading economic indicators. They started coming on. Folks, you can look at this. You can see all the red. I mean, they've been negative for a long, long time. And there was talk about this with recessions and all this stuff. People aren't looking at the data the way they once did, but LEI is still sort of important. What do you make of the combination of leading economic indicators in the red, Walmart's warning about the economy? Because you've said the economy is strong.
Yeah, so we've had the view that we authored the resilient U.S. economy view right here in the summer of 2022 and have maintained that view since and have helped our clients make money.
Right.
And the reason why we don't pay attention to stuff like this is because the nature of the economy has changed. When this indicator was built several decades ago, manufacturing was a 30% of GDP, 50% of employment. Right now, it's only 10% of GDP, 14% of employment. So it's not as relevant.
So every guest is talking about fiscal policy. Every guest is talking about the administration. You talk about fiscal policy in a way you say there are 3 S's. That's how we really will determine the impact of Trump 2.0. We're going to put them on the screen here and get your thoughts on it, beginning with size, sequence, and scope.
Yep. Yeah, so our SSS's theme essentially calls out the risk to asset markets from the size, sequence, and scope of implementing President Trump's policy agenda. Specifically on the sequence side, because I think that's where the most risk lies, is we talked about this last time I was on the program. There are negative aspects of the policy agenda when you think about tariffs and tightening the immigration in terms of how that may impact and tighten the labor market and cause more inflation. On the positive side, we got tax cuts, deregulation, and the DOGE cuts, which should contribute to a positive supply shock in the economy. It's about the net impact of that as it relates to asset markets.
So I just got 15 seconds. The bottom line, though, you're still bullish on this economy and the stock market.
Absolutely. U.S. and global liquidity are headed higher, at least throughout the first half of the year. Second half of the year is where we might run into some challenges on the liquidity front. So I think you buy the dip.
Great stuff, Darius. Thanks a lot.
Thank you.